Hello, welcome to FinInvest Niger. My name is Tom Princeville. I'm a certified securities and investment specialist, and I've been investing for the past 2 decades. In the course of this video, I would like to fundamentally analyze this particular company, Japaul Gold and Venture PLC. Japaul Gold and Venture PLC, with the sole aim of determining its suitability for your investment portfolio or not. So in the course of this particular analysis, I want to start with the company's revenue for the full year 2025 as well as for the full year 2024. We discovered that the company generated a revenue of 4.123 billion naira 4.123 billion naira as against 4.457 billion naira in the year 2025, representing an increase of about 8.10%. The revenue here increased by 8.10%. We now move to the company's gross profit. The company realized a gross profit of 2.666 billion naira in the full year 2024 as against 2.657 billion naira in the full year 2025, representing a decline of 0.34%. You could observe a decline in gross profit as is indicated in the percentage decrease here, 0.34%. Now, for the company's operating profits, the company generated 1.836 billion in the year 2024 as against 1.118 billion naira in the year 2025, giving us a decrease of 39.11%. All right. So the operating profit decreased by 39.11%. Now, for the profit before tax, the figure here for 2024 full year is 1.833 billion as against 1.113 billion naira in the full year 2025, giving us a decline of 39.29%. You could observe the decline all through in the company's profit parameters. We now come to the profit after tax. The value here is 1.833 billion naira for the year 2024 as against 1.113 billion naira in the year 2025, still representing a decline of 39.29%. Now, for the total comprehensive income, still the same figure for the profit after tax, 1.833 billion naira as against 1.113 billion naira, giving us a decline of 39.29%. We now come to the company's earnings per share. This is the most important values, the parameter, in the entire analysis we are embarking on now. These figures represent the most important parameter you use to determine, a company's suitability for your investments or not. So in this case, there was a decline in earning per shares from 13 kobo to 8 kobo, from 13 kobo to 8 kobo, giving us a percentage decline of 38.46%. 38.46%. All right, and now we come to the company's share price. The share price here, as at the year 2024, was 2 naira 23 kobo as against 3 naira 33 kobo in the year 2025, and so there was there is this particular increase in share price, giving us a percentage increase of 49.33%. Okay, now there's something I want us to understand here. These earnings per share, these are the figures, or this is the figure that determines a dividend payout as well as determines future increase in the share price. You discover that the amount here has reduced drastically. In other words, this company will not be able to pay dividends that is above 8 kobo. All right, so the dividend payout is restricted to the value of the earnings per share. All right, so we are through with this segment of analysis. This segment represents the profit and loss statements, of a typical financial statement. We now want to refer to the other segments that represents the cash flow as well as the balance sheet. Now, in this particular segment here, we want to start with the company shares outstanding. That's number of shares outstanding. So in this case, the company has 14.24 billion naira, in shares outstanding, and this particular figure is what governs. It goes a long way in determining the level of earnings per share. The lower the shares outstanding, the bigger the earning per shares, and the bigger the shares outstanding, the smaller the earnings per share. There's that inverse relationship between shares outstanding and earnings per share. That's whenever a company buys back shares and reduces the number of shares outstanding, the earnings per share will automatically take a jump. It will automatically increase. All right, and so this is the company's market capitalization. Is given as 47.5 billion naira, 47.5 billion naira, and this figure is gotten by multiplying the shares outstanding by the company's share price. When you multiply 14.26 billion by 3.33, will arrive at 47.50 billion naira as representing the shares outstanding. Now you come to the company's equity. Equity simply means shareholder value, which represents a difference between the company's total assets minus its total liabilities. By the time you subtract those two, components of the balance sheet, you will arrive at 18.44 billion naira. This is the company's equity. All right, so it is positive, it's not negative. That's absolutely good news. It shows the company has a strong balance sheet. Despite its decline in earning per share there, the balance sheet is somewhat still strong. We now come to the equity per share. The equity per share simply means you dividing this particular value, the equity, by the shares outstanding. That will give you the equity per share, and it's also known as the company's book value. This figure on its own is somewhat irrelevant. That's why you must compare it to the company's share price. Now the share price here is 3 naira 33 kobo compared to 1 naira 29 kobo. So the difference is somewhat close. The closer the difference, the cheaper the company. The wider the difference, the more expensive the company. All right, and so generally, this is what is called net investing. Net investing involves you buying a share that is below its book value or below its equity per share. If you ever come across a company where the share price is below its equity per share, please run and buy that company, because you are buying at a great bargain. It hardly ever occurs. All right, so it's a real phenomenon. But if in case you come across one that the share price is below its equity per share, don't just ask questions. Go ahead and buy that company. That's the reason why we present this, to make comparison between the equity per share and the actual share price of the company. We now come to the cash. The company has a cash reserve of 447 million naira. 447 million naira is the cash reserve. And now, here is the kicker here, the PE ratio. The PE ratio is telling us about how expensive or how cheap the company is. In this case, this is a high double-digit figure, as high as 41.63. To be very frank, this company is very expensive. All right, and this is the full year result. Full year with this kind of PE ratio, the company is simply very expensive. All right, and so should you buy this company or not? This is where everything gets scary, and I want to talk about myself. All right, personally, I wouldn't want to buy Japaul Gold. I don't know of you. All right, it's a personal matter. I'm saying personally, I wouldn't want to buy this particular company? Well, of course, our investment horizon differs, our objectives equally differ, all right, and other parameters equally differ as far as our own investment strategies are concerned. But personally, I wouldn't want to go into this particular company, and even if you want to buy into it, make it a tiny portion, maybe about 5% or less than 5% of your portfolio. If you so much love the company, I've been hearing stories of the company trying to go into gold mining. Well, you may wait until when the results of the gold mining, of the gold operation start coming in, all right, then you can now go into the company with certainty that yes, the company share price will keep on climbing and there will be improvement in the general financial health of the company. But for now, I would advise you just kind of hold for now, all right. Don't go into the company for now until things eventually improve, until we start seeing improvement in all these parameters. Then you can go into the company. Please, if you're really interested in portfolio management, you want me to manage your portfolio for you, to recommend, to buy, to manage, to strategize, to rebalance the entire portfolio for you, then of course you call me on this number. Let's see how we can be of assistance to one another. Please don't call me for for stock recommendation. Don't call me for some other inquiry. You can do that yourself. This particular number is only for those who are interested in portfolio management. That's why the number is there on the on the board. Please like this video and subscribe to this channel if you've not done that. Share to your friends so that we can reach out. My desire is to reach out to about 1 million Nigerians with this particular message about investing in the Nigerian stock market. Thank you very much for watching. You could also watch other contents, other videos in my channel as well.